Yield back below 4%. Let's find out why, what's going on. Rick Santelli with your bond report. Rick, what is going on?
You know, I'll tell you, in terms of treasuries, it's pretty much an idling story. Let's start at the beginning. We closed recently at the lowest yield that was on Thursday for a 2-year since September of 22, 3 years. Now, let's go to the intraday chart. On the left side is Thursday, and you can see we haven't had a very big bounce since that 3-year low close. The right side of that chart is today's action. You know what the size of the range is? We've traded from 345 to 348, several basis points. That's it in our time zone. Now, let's look at a 10-year. 10-year, well, it closed at the lowest yield since October of 24. Let's call it 1 year. Yesterday, Friday. Now, let's look at the intraday chart. You can see once in our time zone, same dynamic as a 2-year, and the same dynamic that's been going on really for a week and a half. We're only trading in a range from 398 to 4%. This consolidation makes many a little apprehensive, as our guest just pointed out, about jumping in to this trading below 4% by a little bit. It's not getting the follow-through many thought. So we'll continue to monitor because that was a new low closing yield for the entire year. And one of the big dynamics we talked about last week, SOFR, not silver, SOFR, secured overnight funding rate. It was at 430, now it's at 418. So we're seeing that the yellow flashing for funding markets is coming down a bit, and that makes sense. The equity markets seem to look past it while it was going on, and they're looking past it now as it goes into the rearview mirror. Brian.